Hello, today is Monday, March 9th, 2009. This is Brian Shannon from AlphaTrends.net. It was another difficult day for investors today, but day traders had plenty of opportunity, long and short. Let's take a look here. The NASDAQ 100 was down 56 cents or 2.13%, continues to close in on the November lows as this is the only market that really hasn't come down and touched and violated those lows. The path of least resistance obviously remains lower. I had shown on Twitter earlier and on the blog that the 5 day moving average was a potential level of resistance. That's exactly what we had here, that the market rallied up to that 5 day moving average and then continued to sell off. We obviously remain in a horrible downtrend here, but as bad as it is, it's really doing what a market is supposed to do while it trends. That is, previous levels of support acting as resistance all the way down here, and it's really a textbook decline as this market stair steps lower. You can imagine a case of stairs in here. That's where that term comes from. But when we look at the 1 minute time frame, the market initially was strong. It rallied up, held above that daily VWAP, had a sharp pullback to the daily VWAP, and there was a nice bounce in there. I was talking about those trades in Twitter, and hopefully you caught some of those. The market then broke below the daily VWAP, and what happened next was actually a bounce down to the 2 day VWAP, and I was trying to trade long in there, got stopped out, and basically I was done for the day in there. I tried foolishly to purchase here later in the day, but realized quickly that that was just a dumb bet because it was below still this declining daily VWAP, and odds don't favor any type of turnaround when that occurs. So on the 10-minute time frame, we got above this prior support, but again, where did it lead up to? Right up to that declining 5 day moving average. The market continues to get more oversold. Everyone is calling for the big rally here, but it's just has eluded everyone so far, which is why if you're going to look for it, no problem with that. If you're going to trade it, no problem trying to trade it when the market shows strength. But you have to, when the market starts breaking down and that pattern of higher lows and higher highs that begins in the first 45 minutes of the day or so, like today and like on Friday, yes, you've got to move quickly to the sidelines. Otherwise, you're going to be experiencing large losses. And there was just really nothing to look for in terms of support. We can continue to look further to the left, that is further back in time over here, but these levels are only potential areas where buyers may show up. As we've seen in the Russell 2000, we're below that $35 area. We're down to the lows of 2003. The lows of 2003 were 34.12. So today's low was 34.26. So we're almost below that. The only level below that that's relevant at any point is $32.30. But again, it's not really that there's buyers in that level looking to average down, or maybe there are, but price has memory, and it's more the fact that there's enough people looking back there, and that's the only thing to look at when you look to the left. So a lot of times those become the key levels. But obviously, looking at the daily time frame, no sign of a bottom. We continue to just bleed in here daily, and it continues to be that 5 day moving average that the market's stuck below. As long as this 5 day moving average is declining, no matter how badly oversold it gets, you have to continue to place distrust in any rally attempt and look at them as only trading opportunities. We'd seen same pattern in here in the Russell 2000, what I just pointed out on the 1 minute NASDAQ chart, and same thing. We closed actually at new lows in here, new closing low, new intraday low. So zero signs still of a bottom. It's a tough market to trade to the long side. You have to be really lightning quick. You have to be the way I like to do it is buying some in here, let's say at the daily VWAP. As soon as I buy some here, it rallies 10-15 cents. I'm out of part of it almost immediately. And that's the way you have to just continue to protect those gains if you get them. This level it's going to be interesting to see now if the November lows actually act as resistance up near 37 and a quarter. 37 and a quarter. If we get up to there, that's a very nice rally, and you have to look at it and just continue to be open-minded. We've got all these levels of prior support that have the potential to act as resistance. It's really remains very difficult to see any catalyst that's going to turn this market around. It's going to be some kind of big surprise, and it's going to take everyone by surprise because there's really not many scenarios that haven't been planned for. We have the mark-to-market accounting meeting of Congress on Thursday. That a lot of people are looking for as a big catalyst. Don't try to bet on it. If you do, maybe you buy call options if you're one of the people who thinks that's going to turn this market around. But the S&P 500 obviously remains below its November low in that 75 area. So 75 would be a great trade from here, from 68 to 75, more than 10%. But still, we remain in a downtrend. We saw volume diminishing in here a little bit today. I don't know that you can really read anything into that, but this longer term level still again it's not always a specific area number, but more of a level, and this is the area of support. This is the area that I've been looking for the potential for support. Just because it acted as resistance here doesn't mean it will be support today. So deeply oversold. What does that mean? Someone asked me, and I tried to explain in last night's webinar. But basically, it means it's down so much that you can't trust selling it short. But the momentum is so strong that you can't buy and decide to hold. There's a lot of oscillators and indicators that measure overbought and oversold, but none of them are really a reason to buy the market. What do we need to see in the S&P 500, the SPY? I think that this level here, about 69, about 70, just under $70 a share. Let's call it $69.80. If somehow this market can make this a higher low in here, we rally above that 5-day moving average. The 5-day moving average acts as support. I outlined in that on the live event Sunday evening. That video, most of that video actually is on my blog, so take a look at that. But it remains really difficult to make money on the long side unless you're very short-term oriented, because there was a huge rally, and this I thought was the best move of the day. That's where I had made my money, and then gave it a little bit back as the market chopped around, but was able to recognize, fortunately, that it was choppy, and didn't press my bet. So let's see, what else do we need to look at? The financials, they were up 8 cents today. So there are a couple people in here who can claim to have picked the bottom, at least temporarily. There are a couple hours worth of trades that were below today's closing levels. So interestingly enough, the financials did hold above the 2-day VWAP, and I was thinking that was an important level today because we had seen the big volume move that everyone got excited about Friday afternoon, and the market got above that and then was able to hold there on a closing basis today. So that's one interesting level on the 10-minute time frame. 6.5 is looking to be a pretty important level. We can look at this once again just because it's there, but again, that's the neckline for this little inverted head and shoulders pattern. Don't read into that, but that neckline is also coincident with the declining 5-day moving average. The rate of descent of the 5-day moving average is starting to slow, so that's one potentially slightly bullish sign. We've got it up to this downtrend line. Breaking a downtrend line doesn't mean that we're going to reverse, but these levels all come together. So 6.5. If it can get above there, maybe you give the FAS a shot with a stop below here, or looking at the 30-minute time frame. That's that same trend line, but then you can always go back to further and further time frames and get bigger downtrend lines in this market, because it just remains a very, very dangerous downtrend, and picking a bottom is the most difficult job there is.